What's up, y'all? It's TB from you know who, Sad Bulls Productions, Sad Bulls Trading. Um, I shouldn't be such a sad bull. If y'all saw my last video, you know I was a bit of a sad, I was a sad bull, you know. But I went out and took a walk, smelt the fresh air, and I just told myself it's just one day. There's another day coming up. It's not that big of a deal. Should have been a win. Lesson learned. We chilled out, and now it's time to get back on the pony and get ready for tomorrow. So I'm really curious about, obviously curious about every day, but I'm super. I don't know what to think about tomorrow. As of right now, futures are pretty big green. I think we're up about a point on the S&P right now. Um, a lot could change from here till market open tomorrow. But yeah, we got that 75 basis point. Powell changed his mind. Everyone on the board changed their mind besides one guy voted on the 75 basis point. So biggest move since '94. It's a big deal, you know. It's rough on stocks. I mean, Econ 101. Every time you look at S&P, where interest rates are low, S&P is high, and when interest rates go high, S&P go low. So we got our little counter trend rally today. I guess you could call it a rally. And man, now that I'm looking at this, like S&P's moving like a penny stock. Like, are you kidding me, dude? What is happening here? This is just wild price action. It held up. We didn't completely dump. I think everyone's like surprised we didn't dump. I was kind of expecting a sort of a rally, but I didn't expect it to be this messy. I mean, look at this swinging. From the bottom of this, 372 to the top, 383. We had a 10-point intraday swing, and it wasn't just like straight down, straight up. It was like straight down, straight up, halfway back down, then back up, then halfway. Like it was a roller coaster, a nightmare. But it held up, so I guess that's dope. Last FOMC, the next day was the reddest day ever not ever, this year. So who knows what's coming up next? It is weird usually when you get a Fed that comes out when it's the most aggressive Fed by a mile, and now they're starting to roll off their balance sheet. They're going to start dumping. They're going to start sucking liquidity out of the market starting today. So that's not great. But as we knew, as my research showed us all, we knew this counter trend rally, I guess if you can call it a rally, was coming. We knew we were right down here at support. We knew we'd get a bounce. We retested that support today and we held up. But I mean, look at this candle, this 4-hour candle. Are you joking me? Look at these wicks, man. Like, this is just ridiculous. This tells you that there was winners on both sides, and I wasn't on either. No, it sucks. But enough of that. Enough of my self-pity. That candle is ridiculous. I can't see a candle that looks even half as ridiculous as this candle. Maybe this one over here. What happened then? 13th? I mean, not even. Like, this is just the stupidest thing I've ever seen. So now it's a matter of, are we actually going to go fill the gap? Maybe tomorrow. As of right now, we're going to open, I mean, after hours, we're probably going to open around this key level. Going to see if that holds up. But anyways, about the Fed, yeah, big old rate hike. He's still coming out here talking about this stupid soft landing. He still said it's possible for the central bank to achieve a soft landing. They have some pretty optimistic inflation projections. We can take a look right here. They have inflation by March of Yeah, inflation by the end of 2022, they have it at 5.2%. In March, they projected it would be 4.3%. I think that's really optimistic. That's almost cutting inflation in half in 6 months. That's very optimistic. If we get to that low in 6 months, that would be great. And then by the end of 2023, they project we're down to 2.6%, and then by 2024, we're down to 2.2%. So that would be great. That's what they want is 2%. So that's 2 years, but I mean, they're projecting we'd be very close to that by the end of 2023. And I think they raised this projection, so you can see the March projection, what they projected last March, because they give every quarter they do the economic data and projections and whatever the hell. Whether or not it means anything is a whole different debate, but Yeah, they raised their short-term one and lowered their long-term ones just barely. I think because now they're doing their higher rate hikes. They were planning on doing 50. This is what Powell told us. He was like 350 basis point hikes. So he told us that last meeting, but they had to change their mind because of CPI data. So he didn't give us a for sure answer on what's up for next meeting. He said for sure it would be at least 50 points, if not 75. So we're back to the waiting game. This is the market we're in now. It's all about CPI data. It's crazy. It's literally just wait around in the chop for 3 weeks and then wait for the next CPI data report because that's all anyone cares about. Evidence of that was what happened the week before CPI. We did this. This is what happens. You just chop around for about a week and a half straight. So that's something to look forward to. But this is the market we're in. Inflation is the name of the game. There's no ifs, ands, or buts. It's inflation. It's the worst thing ever. You don't want it. It's killing the consumer. So they did really jack up their projections for federal funds rate by the end of the year. They say by the end of the year they'll be at 3.5%. By this year, 3.8 by next year, and then 3.4 by 2024. So they hope to start dropping the interest rate by then. Not really dropping it, but easing into. I think he said they want to hover. They want to hover around 3%. I mean, that's where the federal rate's supposed to be. But if we go into like a full-on depression, if inflation stops, they're gonna drop rates to zero. And that'll be the sign the recession's over, as it always is. So that's. Yeah, it could be a long ways out. I mean, if their estimates are even like too conservative and we kill inflation quicker than that, they might drop interest rates in a couple of years from now. Who knows? Or even a year. Who knows? So unemployment. This is interesting. They're forecasting unemployment going up quite a bit. He didn't use the R word. He didn't say they want to force a recession, but he acknowledged that a lot of the issues are just out of their control. Supply chain. Oil, the war in Ukraine, yada yada yada. But they just acknowledged that the CPI data was terrible this last Friday. They couldn't believe it. They were blindsided by it. So they woke up and gave their heads a shake, like I said they ought to, and they did. So they listened to me. Thanks, pal. Glad you got my message. He's a subscriber, I think. But now. It's just a question of how bad things get. So they jacked up their unemployment projections, projecting 3.7 unemployment, which, I mean, unemployment going up a little bit. I think people would rather see unemployment go up a little bit if it meant inflation going down. These aren't terrible levels of employment. I mean, they're higher than they are now. They projected unemployment going down, but now they realize this last CPI report, everything's different now. It's probably going to be a recession. They still project real GDP growing, but that's really optimistic. Yeah, they cut their estimates on real GDP growth down quite a bit. But yes, it was interesting day. I mean, just weird. Any other time you would see the most aggressive Fed since '94, and you would if you didn't know what the stock market did, you'd probably take a wild guess and be like, oh, the stock market must have tanked. But that's why they already priced that in. The stock market saw the CPI report, and that's why I think the stock market rallied a little bit today because, like I said, the stock market was expecting 75 basis points. If they came out and just said 50, I think it would have tanked because everyone, you could see the market literally priced it in, the 75 basis points. We dumped. So now that that's priced in, we go back to reality, and it's like, wait, well, that's actually still bad for stocks. It's always bad for stocks when interest rates go up that high. So now it's just like, where do we go from here? And that's what this candle tells you. The market doesn't know. This is uncertainty. This spells out we don't know where the market's going to go now. So just really interested to see what these next couple days are going to look like. We do have a long weekend this week, don't we? Juneteenth or whatever. That's now a federal holiday. Stock market close. Yeah. U.S. and stock and bond markets closed June 20th. So we got a long weekend coming up. So a lot can happen these past couple days. A lot typically happens after these FOMC meetings. I pray to God it's not like last FOMC meeting where if you forgot, this is the price action we got. We got a ridiculous push and a ridiculous dump. A tiny little bump, a big old dump. So hopefully nothing like that happens. We weren't at support when that happened, so we had a lot of ways to go down. We don't have much ways to go down. We're technically oversold. The daily bounced off the oversold just slightly, but gotta see more. And then another thing, I am so sick. Every day opens on a goddamn gap, dude. I'm gonna lose my mind. It feels like every day there's a gap. I'm so sick of the gaps, man. We open on a gap every freaking day, I swear to God. Except for no, we open on a gap over here too. I mean, it's always a gap. You're always expecting like a little tiny gap, but you get these gaps today, and it's just like, ugh, do I want to short this? Like, usually you go to the gap to the downside, and you're like, hey, I'll short, but then it bounces hard, and it goes down a little bit. Like, we're not seeing the gap fills, like, go straight through anymore. We're seeing, like, half the gap, and then a big bounce, and then it goes, and it barely wicks in. It just, like, slowly fills the gap in choppy movements, and it just drives me crazy. I can't stand these gaps. But, I would think the market would rally from this. What do I know? But my guess would be a rally, and I think we got to test the resistance, so now we just got to take back that level right there at 38.15. We got plenty of gaps to fill to the upside, so you would think it shouldn't have a tough time filling that gap, but it's just hard to say, man. You never know. Some terrible news come out tomorrow. But I think I think this is a big step for the Fed. There's no going back from this now. They gotta stick to their word. They gotta be tough on this shit, man. It ain't good. Powell said they don't want to force a recession, but of course he's not gonna admit that. If he was like, "Yeah, we're trying to force a recession," what do you think the stock market would do? But I mean, the unemployment rates aren't that bad. I don't think they would get that bad. Um, Yeah, it's gonna appease the Fed for now, but they're just so far behind on this, and it's like he acknowledged that too. How, like I said, he said a lot of those things I said. I don't know what I'm talking about now, but he talked about how public sentiment cannot like it's slowly creeping up that everyone's getting used to inflation. Everyone's like, inflation's a thing, and that's like counterintuitive. You need the Fed to step up and be like, nope, back off. No, 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 no inflation. Because everyone starts thinking about inflation, it just makes it worse. Everyone demands a raise. Everyone gets paid more. Companies have less. They charge more. Don't have to explain that for the 30th time. Um, I saw some. What is it? This is very interesting. I mean, this is kind of old news, but 2021 study, whatever this is, PYMNTS, payments, 53% of those who are considered upper income, 50,000 to 100,000, are living paycheck to paycheck. Like, that's crazy. You're making six figures and you're living paycheck to paycheck. And then this is also what I'm talking about, the lifestyle creep, where you just increasingly, everyone was job hopping. That was the big meme, jumping jobs, getting raises. Everyone's getting fat raises. Hey, I left my company, got $30,000 raise. What do? They change their lifestyle. Of course, why save money for a rainy day when this market's just so good? Nothing's going to go wrong. That's when things are good, everyone forgets they could ever get bad again. And now that things are bad, I feel like things are never going to get good again. So it goes both ways. But that's only because I've been in this terrible market and only seen this. So, yeah, everyone went and got a fancy car. It's a lifestyle creep. So that's the scary part. There's the most credit card debt ever in America. I don't. It's bad. But and then Powell said something interesting about mortgages. He said, and this ain't gonna be good for the housing market. He said if you're like a young person looking to buy a house, you should wait for a reset. He literally said reset. What do you think that means? That probably means wait for the housing market to crash, basically. Oh, not a crash. No. The housing market can't crash. That's what everyone on the TikTok says. All the side hustle bros on TikTok. Housing market's rock solid. It can never crash. But Powell literally just said, wait for the housing market to crash if you want to buy a house, even though your rates are going to be 9% on your mortgage. So yeah, that's not optimistic. But yeah, it's crazy. I think it's a good step, though. I think this will help. It's got to be done. They got to kill demand. It sucks. The 5.2% rate of inflation rate by the end of this year is still very high. We've almost become sensitized, yeah, desensitized to inflation. Like 8% inflation is effing high. 5% inflation is very high. Like I said in my recent videos, back in 2009 or 2008, they were just flat out ignoring the financial crisis because they were so worried about inflation until they realized that inflation is probably not going to go up in a massive financial crisis. So things are just crazy. I mean, 8% inflation is very, very high. If it's still at 5%, it's still way too high. Like, that's still double. They're trying to get that shit at 2%, and they took the correct steps in that direction. So, let's see what the rest of the week looks like, guys. I'm optimistic. Today really beat me up. I really like seeing the green, but I hate when I don't capitalize it, because I know when those red days come, I just freeze up. And then we get the green, and it can't just be a nice, clean green day. It's got to be a day like this, right? Sponsored by Dr. Pepper Zero. Yeah. So that's all I got for you folks. Just want a little update on it. Want a little, hey, I told you so. Fed would probably do this, and they said a lot of what I thought they'd say, and so that's great. Now eyes are just back on to. I mean, we're probably gonna. When did the next earnings start? I mean, shit, we're gonna be rolling up on next earnings season eventually. Yeah, in a couple months. And Powell said that they're really paying attention to like companies like Target, the Walmarts. They're paying a lot of attention to their earnings because they say a lot about what's going on. They tell you everything about the American consumer, so they're watching out for that. And they're probably like, yeah, things are gonna get bad. But if we kill inflation, that's all we care about. Kill inflation without killing the labor market. So that's the name of the game, folks. That's all I got for you. Peace out.